Yes, I'm back, guys, with another one. Just a quick one. Well, I always say just a quick one, but it turns out to be an half an hour one, but try my best to make it as quick as possible. At the minute, I'm just looking at Nia, and we're on the weekly. We've got a couple of fair value gaps here that I've been tapped into before. So we've got this one here. It's your fair value gap. So to mark out your fair value gap, don't know if people know how to actually do it. So from that wick to that wick, click there, you'll bring it over, and there's your fair value gap. See, I've got a midpoint there as well. So take that midpoint away. How to get your midpoint, get your fib from there to the top of the box, and there's your 0.5 level. So then you'll grab this, get your 0.5 level, mark that out, remove your fib, there's your midpoint. So if you have a look here, so this fair value gap that got created in February, and it had the big push up, and then it came back down in these areas, tapped it once, tapped it twice, and then fired off again. So when you've got a bullish fair value gap like this, and it's coming up and then back down and retesting this fair value gap, so if you'd have taken a long here when you've seen it get rejected once, twice, you know, you got a nice 65-70% move there. Also, what you want to do is, say you are going to take a long here, and you've marked out your mid-range, you've seen how it's reacted the first time. Don't just enter at the mid-range, watch the reaction. So you can take your long there on this candle, not that candle, this candle. So when you've seen it starting to get rejected, have a long set out here. You know, most people will put the stop there, which is below that last swing low on the weekly, and you're going to be aiming for around that area there, which is a 2-to-1 risk to reward, which is a good risk to reward. So say you took that, you had a nice trade there. This is another one I've got set up here, because we've got a bearish weekly fair value gap there. These little purple boxes here are dailies. So if we go down into the daily, if you have a look at the big weekly fair value gap that's here, you've got your midpoint, you've got your daily there. So what you really want to be seeing is, where's my pen? You know, you're probably going to be seeing something along these lines. It's going to play around in the fair value gap. You want to see it push up. If not, if it does this and gets rejected around this area, which is the midpoint of that daily, it could come back out and take out this low here at this area. But to go for the long, you want to see it invert that daily. See it come up, see it invert the daily, come back down, retest the daily fair value gap, hold, push again, hold that fair value gap, push again, and then you'll probably be looking for around this area here. But we have got another bearish fair value gap there on the daily that's been created. So, you know, you want to be taking some sort of profit around that area there, which will still give you a decent trade. You know, when it inverts that, take your trade. You know, 21% move. If it inverts that and carries on, coming up into here, sideways, pushes off, retest, and then fires away again, that's then being inverted. But along the way here, it could create more bullish fair value gaps. We've also got a demand area down here. Let's have a look. And then you've got your supply area up here. You know, this liquidity here will get taken at some point. Let's go back down. Let's go up to the weekly again. So you've got liquidity around here, round here, round here. So I'll be waiting to take that trade. I'm not just going to dive into the trade. You know me. I like my longer term trades. I'll look, I'll see, and then I'll enter. So if you want another example of it, we've got another one here. Before the initial push, where on here I originally entered this trade here. So we've got a small fair value gap around that area. I entered on that retest. What I shouldn't have done, which I did, I moved my stop up once it had come back down into this area, because it created another fair value gap, another bullish one there. And it started to invert that fair value gap. So while I was watching it, I didn't close my trade, I stayed in the trade. And I moved my stop up to around $3, and it wicked me out here. A foolish move by me, but we live and learn, and I shouldn't have moved my stop, but I did. I was still in profit, I still made money, but I did miss out on an extra, what was that, nearly 190%. But we live and learn, like I say, and we move on. So like I say, this is another example of it here. Get your fib from this area up to the top of the box. You've got your mid-range, which is the 0.5 area. Move the fib now. And I moved my stop a bit higher up than what I actually should have done. My stop should have been here at around $2.09. I moved it to there and got wicked. So it is what it is, but also what you've got to give you that bit more confluence here on the weekly. You've got your 20 and your 50 EMAs as well. So when this has come up, created the gap, come back down, got rejected off it, a lot of people probably would have taken that short, because it does look like it's not going to respect the bullish fair value gap. But like I said, I entered down here because I seen it respect that fair value gap. Also, we have this area here, the EMAs crossing. We just come away from a demand zone as well, which is a point of interest. So when we've come back down, and then, you know, it's not really created a bearish fair value gap here. So you don't really want to be taking no short there. Also, with these crossing the way they have done, that, you know, it's not time to short. You're looking for a long. So then you've had it coming up. It's respected it, the fair value gap there. It's then retested the midpoint of the fair value gap. You've got these crossing. You know, you could have taken your long there on the retest and gone again. That's where I re-entered. After it wicked me out, I re-entered and got the profit that I needed. So I made profit from here to here, then re-entered and got that move. So it's only the same for spot. Like, I do a lot of my charting on the spot, because generally you'll see it happen on the spot, then it'll happen on the futures or the perp contracts, whatever you want to call them. So that's how you want to be marking out your fair value gaps. It's not difficult. Also, we've got the volume profile here, what I use. You know, I use it a lot. A lot of the volumes here in this area. We also had the point of control here. Once it start coming up above that point of control, and you've got your value area high here, it's then took off from that area and carried on pushing the way it did. So like I say, I'm probably looking for another long here in near. I'm not going to take the long yet because I'm waiting. I was looking at this area here as a liquidity sweep. It's not come down into it, but in this zone where we are now, you've got your 50 EMA. I think it's your 50. I can't remember what colours I've made out. It's either your 50 or your 20. Yep, your 50. What, it's tapped your 50, and then it's taken off. So if we go into the daily, and I think that blue one there is either the 200 or the 300 EMA. It's the 300 EMA, where it's respecting this 300 EMA here, but it's getting rejected off of the midpoint of that fair value gap at the minute, which is a bullish fair value gap, but it is getting rejected slightly. So I'll be waiting for a confirmation before I actually take this trade. Let me try go to a blank chart. Just go to Cardano. Not really one that I like to trade, but let's go to Cardano. Right, let's have a look at Cardano. So previously we've got another one here weekly. So like I say, you're just going to go from the wick to the next wick, drag it along, get your fib from here to here, see your mid-range. Can't really see it, 1 second. Got your mid-range there, mark out your midpoint, move your fib, and then have we got any more fair value gaps here? Not that I can see, but we have got another one here that got respected and took off, but now it's inverted that fair value gap. So you can see what I mean, like these bullish fair value gaps sometimes will turn into a bearish fair value gap. See how it's respected that? So even if you get your midpoint here, look at the midpoint respect. It's respected it. So you could have taken your long there, put your stop just below that wick, and away you go again. And what move did we get there? Say we take that. I didn't take this trade in Cardano. 78% move. That's why I like to look at certain long-term trades. I don't. Like I say, I do take some scalps every now and again, but it's not really my forte, scalps. Mid to long-term trades are my forte. How I like to trade. So this fair value gap, like I've marked out here in Cardano, we've not in effect tapped this area yet. This could tap this area, but there's also another thing here. We've got all these crossing at the minute. if we can see something along these lines, I'm just going to say that's the midpoint. Before we take another long, you know, you want to see it coming up like that. If it goes to here and rejects again, it's probably going to be taking out that liquidity there, around this area. If it gets rejected, does that, might come back into this bullish fair value gap here, tap, and take off. So if I were going to take a long here, I'd have a limit order set there. I'd be putting that just below that fair value gap. That's where I'd be putting it. And then I'd be aiming for, I'd be taking 50 off here at this midpoint, which is a 5.9. And then I'd be looking for, we've got liquidity around here, we've got liquidity around here. I'd probably be aiming for above that. If it inverts, I'll stay inside that trade. So if we get that, and it taps to midpoint, take 50, sideways, comes up, does that, there's your trade. Until then, I won't be touching it. Unless, like I say, if it can do something. Let's have a look. Oh, it's not like the first time I've done that. If it gets rejected here, that short might be in play. You're going to be putting your stop above there, and you're going to be aiming for that fair value gap there. Also, if we get the anchored volume profile from there to there, at the minute we are getting accepted below the value area low, point of control. We've got the value area low around here, and we've also got the bullish fair value gap on the weekly here. And we've got crossovers occurring at the same time. So there's two potential trades there in Cardano. Keep an eye on them. You've either got a long or a short. You've got a short if it gets rejected here. If it comes back up and shows no bullish volume at all. Don't get me wrong, I'm looking at this volume here, and the bearish volume slowing down. So if we do get that move into that area, which will be at the point of control, and you're aiming for that liquidity there, and your stop's going to be there, there's two potential trades that could play out. But most of the volume's here. If it does come up into this area, above it, retest, enter, it'll move fairly quick through these zones because there isn't a lot of volume. There's a gap in that area. And then we've got volume here and volume here. So keep an eye on Cardano if you're wanting to trade that. I'm not saying I'm going to trade that, but keep an eye on it. I might take that trade. If I take that trade, I will let people know in the group in Crypto Whale Pumps that I'm going to take that long or I'm going to take that short. But I want to see the reaction. I want to see the candle formation. See how we're getting on. There's another that I wanted to look at. Just having a look at Sol here. There is a potential trade in Sol. But can you see if there's a fair value gap in certain areas? Like we've got one here. See that's your fair value gap there. It's come up. It's gone down through it. It's come back up into it, and then it's dropped again. and you probably got a really nice trade there as well. Say it come back into that fair value gap there. 25% move. You don't need many trades to actually make the money. You know, most of your bags should be sat in spot. Just let them chill in spot. Got a small fair value gap there getting created. It's not been created yet, but you know, the potential for a fair value gap to be created around this area. We've also got another one there. Another one there. So it started firing through and then it got rejected away. That's when you want to come down to daily and have a look at the daily. So we had a bullish fair value gap there, never got tapped. But once it got tapped, it's then been rejected. Which then it's creating bearish formation. So then I've got another thing to show you that somebody brought to my attention. That's called the bottom and the tops of Bitcoin every single cycle. And when I seen this, I was like, wow. Even I didn't know it existed. And this was a few weeks back. Somebody put me onto it and I had a little look. So it's called this here, chainexposed.com. And what we've got here is so if we have a look here, supply in profit and loss. So if we have a look here, so if we go to this area here, generally when you want to go long is when supply is in a loss above 50. So if you have a look here on this price, the supply is in a loss above 50, 53%. It's in a loss. And it's called it every single time. Look here. What was that at? 3K. It's called it there. 52% were in a loss here at 3K. And then it had that massive rally. That was December 2018. The rally ended. You see how supply were in 100% profit there at 63K. And everybody sold. And then it dropped again. And then it had that little mini push again. Supply were in profit again. 98% sell. At the minute, this is what's a little bit worrying. Supply is in profit 89%. So then we'll go on to, it's not that one, the new pull chart. And this is another one that's called it, when it's below the zero line, November 2022, it will be below the zero line. It was in July, in September, and then it had that little dump back down again. And then it pushed off to where we are now. So generally when it's below the zero line, you want to be longing Bitcoin. At the minute, personally for me, there ain't no long. This is another chart here. These are certain rules that you want to look at. So if it's below certain areas, that's where you want to be long. So like if you look here, just using them free charts alone, not even looking at price of Bitcoin, just using the free charts alone, these charts have called the bottom and the top every single time. So that's your overheated zone. That's your opportunity zone. And if we look here, November 2022, your opportunity to long Bitcoin were here. It came into the opportunity zone. And we long. From 15k, it could have been long. I got in at 23k, I think, on one of my other accounts. And I'm still holding it at the minute. The only reason I'm holding it is because we're not here. We're not in the overheated zone. I can see us being in that overheated zone. So at the minute, November 22. If we go to November 24, that'll be 2 years. So let's go back. Let's have a look here. December 2018. March 20, that were 2 years. It went to the midpoint there. And then came all the way back down to the opportunity zone. March 20 to February 21. January, February time. Only 1 year. But if you're looking at it from here, 2018 to 21, that was a 3-year run. In effect, that was a 3-year run. And then we've been rejected in the overheated zone again. We had that big price push at around 63k. And it came all the way back down. November 21. And then we came into November 22. So, in effect, I know everybody thought that we were in the bear market a very long time. We've not really been in. So from February 21 to November 22, that were only 1 year. 1 year bear market where it's come all the way down into here. People were making out like we were in a bear market for 6-7 years. We were in a bear market for a single year. We weren't in it that long. And this is called the top. Look, the top, the top, the top. Every single time. The bottom, the bottom, the bottom, the bottom. Every single time it's called it correctly. So I really don't think the run's over. Personally, I don't think the run's over. But when we start tapping into this zone here, that's when the run's going to be over. I called the top between 82 and 86k this time round. That's the top. That's my personal opinion. I know we've had a lot of sausages out there that are like, oh, 100k Bitcoin, 100k Bitcoin. But I remember when people were calling 100k Bitcoin here. What they didn't realise was, I were looking at this chart here and thought, looks like we're a bit overheated here. And then, boom. All the way back down to 15k. And then Bitcoin went quiet again. You know, that somebody said something, and I said it in the chat the other day. Buy into fear, sell into greed. So when everybody's greedy, you're selling. Don't give a shit what people are saying on TV. I don't give a shit what these gurus are saying. Oh, Bitcoin 100k. I don't really give a shit what they're saying. I'm here to make money. I'm not here to listen to Andrew Tate with his cigar, with his tight little pants on, showing his little winky. I'm not here to do that, me. I'm here to make money. I don't care if Bitcoin goes to 100k. If it goes to 83k, 82k, I'm cashing out. I don't care. And then I'll wait for it to come back down in this opportunity zone. Till then, I'm not rebuying Bitcoin. It's what people don't realise. People want fast money and end up losing the money fast. So, take a look at these charts. It's the relative unrealised profit. The new pull chart. Down at the 0 area. And we're up in this 1 area. We're not at the minute. But when we get up to this area, look at, I'll be looking at some sort of cash out. Look, top, 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 top. Look at some sort of cash out. And then we've got the supply in profit and loss. And at the minute where we are, supply's only in a 10% drawdown. And it's 89% up. So keep an eye on that. It's a little trick for you to call the bottoms and the tops. It doesn't. I've not really found one that you can see with altcoins. That's why most of the time I'll just be using normal trading view charts. But BTC's the big dog. That's what moves the market. And then just before I go, we're going to have a little look at USDT dominance. We had a trend in play around here, which was a downtrend. We broke above that downtrend. We want to see it come below that downtrend again to continue down in this zone, to possibly tap that zone. Let's go to the weekly. If you have a look, yep, this zone here. If it taps in at this zone here, which is the 3.64% zone, thinking about taking some money off the table. If it falls below that zone and carries on going down to this zone, which I don't really think it will do, keep an eye on that chart as well. The BTC dominance. Also, we had another downtrend in play. Started to push off. It's broke above that downtrend. Certain areas of interest there and there. Keep an eye on that chart as well. Also, another little chart that I like to keep an eye on is the DXY, which is the dollar index. We've got this trend in play at the minute. This downtrend. See how we've gone sideways? We've hit this downtrend and now we've started to reject. Want to see something like that? I drew that the other day. Back into this zone here, which is around $89. If we can see that, crypto will probably move. If we see something completely different to that, if we see something along these lines where it's jumping across there and starts firing up, yeah, crypto's in danger. Just my personal opinion, not a financial advisor. Let me get that out there. But I love to read charts. It's like the stock market at the minute, the stocks, S&P 500 and things like that. Just keep creating new highs every single day. Look at that. Look at that for a push-up. Lovely. Lovely if you got into S&P 500 down here. Lovely. I doubt most people. Also, you got this little technical here. Still in a strong buy. Gold. Fortunately, I didn't buy gold. Somebody told me to buy gold here. Ignored them. And bam. Because I ignored them because I was concentrating too much on crypto at the time. But I'll tell you one trade that I did get into. I got into this one. I got into a video here. $238% up on the video. Also got into Microsoft, Amazon. I'm looking at Intel. Something I've told everybody in the group. I'm looking at Intel due to the fact that Intel are meant to be creating a deal with Nvidia. I got told this by somebody who I know. I know we are pushing further down, but generally what you'll see when they're actually going to be creating a deal, you'll get this little drop back down to deviate back into this area. If we go to the weekly, fair value gap there. Got a fair value gap before it pushed off. Let's have a look at that fair value gap there. Tapped into that fair value gap there. You take a long at midpoint. 83% up. We have been creating bearish fair value. We've got a bearish fair value gap there, but we've also got a bullish fair value gap there that's been inverted, and now is a bearish fair value gap. You want to be looking at something like, you want to see them EMA start to come under like that, start crossing, price coming along like this, big push up, down in, big push up, down in, creates a fair value gap in here, around this area, taps in, fires off. So I'll be looking at a long on Intel around $36. So keep an eye on that one as well. But that's it from me. I told you it was going to go on for ages, because once I get going on charts, I can't stop. And I will catch you in the next one. Happy trading, guys.